Good morning. It is Wednesday the 28th. Here's what's on the agenda. Trump greenlights a weaker dollar. Gold hits another record. And ASML prints a massive beat with Mag 7 earnings incoming.
Tom, two stories for the markets this morning. You've mentioned the dollar. We've certainly seen some big moves overnight. Euro dollar now trading 119.97. We've had a touch at 120 overnight. Gold looks like it's heading for a huge day as well. Dare I say it, a massive day. And Euro Stoxx 50 futures lifted by the other big story of the day, and that is ASML. Its massive beat, lifting Nasdaq futures and Euro Stoxx 50 futures. That is the story that we're watching as we watch for big tech earnings a little bit later. The countdown to the opening trade starts right now.
Mr. President, with the current value of the dollar, do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great.
Good morning, everybody. That was President Trump given the opportunity to talk up the dollar, and he didn't take it. He thinks it's great. We've seen a lot of dollar decline, of course. We've talked about it a lot during this program, and he doesn't seem to be too worried about that. We're used to him being a little equivocal on where the dollar goes. Scott Bessent has been the one who's more talked up the dollar, but this perhaps giving the markets another reason to talk about dollar debasement.
Was it off the cuff? Can I ignore it? The market has reversed a little bit of this move, but not all of this move. What does it mean for inflation? Is this effectively a signal as well on what is happening in terms of his suggestions around the Fed? I don't know. It felt off the cuff, but was it? Was this actually part of a kind of deeper strategy that Trump has? He likes a weaker dollar. He thinks it's going to improve the terms of trade story going forward. I don't know, but the market certainly, he was pushing on an opening door already.
And he particularly called out trading partners as well. Historically, he pointed out he's been concerned about China. He's been concerned about Japan. Of course, Japan has been front and centre as well. He has had mixed messages historically in terms of where he wants the dollar to be. He is torn on this, it seems. But given the timing, this is a president who has a finger on the pulse of not just the markets, but domestic political sentiment as well. It seems unlikely that this hadn't been thought through with a cabinet which is stacked with members who do want to see a weaker dollar, where that Mar-a-Lago Accord has been discussed.
And you're right that the market has pushed back a little from where it got to in terms of the weakness, but it is getting more expensive to bet against the dollar. That's what you're seeing in options markets. The market is taking this pretty seriously, and this is relevant to global corporations.
How does Europe? This is our currency, your problem, isn't it? And that's what European companies are going to be having to react to. So let's talk about that.
Let's get a view right now and bring in Christophe Fouquet, CEO of ASML. We'll get a view on the euro, but let's start, Christophe, with a huge beat in the fourth quarter for ASML and how that positions you and the business for 2026. What underpinned that strength of orders? More orders in the fourth quarter than in the previous two quarters combined. Christophe, is this as good as it gets or just the opening innings?
Well, I think, good morning, Tom. So I think you said it. I think we are very happy to finish the year so strongly. I think that, the ASML team has done a great job delivering on our very, very big quarter. And we are looking at a record quarter. We are looking at a record year. So this is very good already for 2025. And when we look at the midterm, in the course of last year, we sometimes had some doubt, basically, or some uncertainty on what AI will do to our business, because, to be honest, it took a bit of time to convert some of the great announcements we heard from the AI company to semiconductor. But the last 3 months have brought a lot of clarity. And I think what you see basically is that the semi-industry, our customers, start to believe that this AI demand is sustainable. And therefore, they have moved into building capacity, and they are moving very aggressively. And I think this has been very nicely translated indeed into a record booking number. So that's, of course, very good news for the midterm. That's 2026, most probably also beyond that.
Does it pull forward, Christophe, given that demand, given that build-out, does it pull forward the time frame for your most sophisticated product, the high NA EUV, or is that still a 2027 story?
Well, I think that, the pool is on all capacities. So we're going to look at logic, we're going to look at DRAM. I think, the first move will be using existing product, and we'll see a lot of pull on our low NA UV this year. This is clearly one of the products that will be in high demand in 2026. But we also see that on our less advanced lithography system, DQV. We also see that, by the way, on inspection and metrology. So we see basically on the short term a huge demand basically for everything we have to offer our customer today. Now, the other element is that on the longer term, AI application, I think we say that in our Capital Market Day, November 24, those applications have huge appetite for advanced technology. And we also see our customer ramping their most advanced technology nodes, so 2 nanometer for logic. We look at 1C for DRAM, and they are looking also, forward to the future with the need basically to continue to innovate. And this, of course, position our future technology also nicely. So I think on the short midterm, 26, 27, you look at an impact first and foremost on our existing product. I would say low NA UV most probably be on top of that. And beyond that, of course, we expect also positive development for NA.
Christophe, good morning. It's Guy. You said the last 3 months have brought clarity. I was listening to your good friend, the CEO of TSMC, the other day, saying he was feeling pretty positive about the way that the world was going to develop, but he was a little nervous about the build-out speed when it comes to the AI story. Do you share in any way any of his nervousness?
Well, people who invest suddenly so much, I think, always should be a bit nervous, right? If you're not nervous, then I think you're not responsible. So I think we have all been surprised by the magnitude of AI, and we all saw it coming a bit. But at the same time, we see those investments coming out, and it's pretty big. And I think that all of us are continuing to watch, basically, for the sustainability of those investments. I think sustainability is a key word. I think the question is always, is this going to last? I think that more and more of our customers are responding positively to that question. I think CCW is a good example of that. I think he is evolved quite a bit in the last 12 months. We see that with our DRAM customer. And therefore, we mostly follow those opinions as well.
So you see it as sustainable? You see the pace that we are seeing in terms of the build-out as sustainable?
Well, we talk about short, midterm, so that means usually the next couple of years. So there, I think we have a lot of strong elements pointing to sustainability for that period of time. We are true believer also of the impact AI will have on our society, the type of application, the number of applications it will bring. So principle-wise, I think we also believe that AI is a major revolution for our industry. And we have to see, of course, what is beyond that. But, I say it again, like we have said in the last 2 years, AI is big. And this is about product, this is about infrastructure, this is about investment that will revolutionize, basically, society for many, many years to come.
Good morning to you, Christophe. So you're getting some clarity from those who are spending a lot of money on this, and you're feeling a bit nervous, but that's just to be responsible. Can I ask you about what's going on in the currency markets? We started this program talking about big moves in the dollar. We've been doing that for a while. The euro has been pushed up as a result. As somebody who manages the largest business in Europe, can you tell us about what impact the strength of the euro has on your company? Well,
I think we have a lot of moving targets, I would say. This is one of them. I could bring politics. There are many, many, many factors that are in some way having some, I would say, impact on our business. But I would say that in comparison to the drive that we see happening on the end market, this is pretty small. And I would even say this is not new. I think, money exchange fluctuation has always happened, dollar, yen, this is our environment. So I think we managed that very nicely. It's not, for me, a big concern in any way, because the impact on our business, I would say, is always very limited, and we have learned how to manage that for many, many years.
OK, so not a big concern. You've announced a buyback, a substantial buyback this morning, Christophe. What's the message that investors should take away from that?
Sorry, I missed your question. Can you say it again?
There was a buyback. You've announced a buyback this morning. I wonder what the messaging is behind that.
Well, I think, also very consistent to what we have done in the past. I think that, if we create value, we want this value to go back to our shareholder. Many ways to do that. Sometimes we're investing in, other company. When we don't do that, I think our dividend and our share buyback policy has been very, very consistent. You may have noticed also we increase again our dividend, for 2025, total 2025. And we'll continue to do share buyback on a regular basis to bring back some of this extraordinary value we plan to create in the next few years. So I think that's very consistent with our overall policy and the way we want to continue to reward our shareholder, which as you know, are very, very important for us.
Christophe, maybe part of that as well is down to this line as well, the focus, streamlining IT and tech. What, from an investor perspective, what should they expect? Is that streamlining of headcount? Do we expect job losses as a result of that?
So I won't tell you too much on that now. We can ask the question a bit later today because we are talking with our folks as we speak. The one thing I can tell you is that, we are doing great and we are very happy with that. But even great company needs to improve. And, we got the feedback from our employee, from our customer or supplier that, we could be a bit more agile, a bit more effective when it comes to develop our product, to do it faster, better, et cetera. So we've been working on trying to enable that in the last few months, and this is about to go live. And again, there will be some more news, in the next couple of hours that you can refer to.
Christophe, we'll look forward to hearing what you have to say a little bit later on. Can I come back to your customers and ask you another quick question on your customers? When it comes to the cutting-edge kit, the 3 and the 2, how much of that is going to Asia? Is it going anywhere else? Are we seeing any of that kit going into the United States? Does any of it find a home in Europe? Is the story of AI and the chips needed to power it purely an Asian theme at the moment? Is that something that you think is going to persist? Can it be changed?
Well, I think it's changing. So I think today, of course, the majority of our shipment are still going to go to India, and that's also true to Asia. Sorry, that's true for advanced technology. But at the same time, I think you realize that our advanced customers are shipping most of their advanced product to the United States. I think the United States is by far the biggest consumer of advanced chips. Therefore, the dynamic you see building up more capacity in the United States. And we see some of our customers, I would say, accelerating that. TSMC, of course, has been very public. You know that Samsung is also opening a fab. So if you look at the overall share, I think the United States is, in fact, going up. So we see some progress there. And we expect that trend to continue. So Asia will remain, of course, very strong because this is where manufacturing is. We see the United States growing up. Europe, when it comes to advanced technology, is still very small because, no manufacturing today, but also very limited use of the end product. So that's a bit of a challenge still for Europe.
Christophe, it's been great to catch up. We really appreciate the time. If you're ever in London, stop by and see us on set. It would be fantastic to host you here. Christophe Fouquet, the CEO of ASML, thank you very much indeed. It's going to have a big impact, that story, on today's stock performance of the wider markets, and we'll monitor that as we approach the open. In terms of what we've got coming up, we're going to talk about what's happening in the fixed income space. Laurent Van Bion is going to be joining us, Allspring Senior Portfolio Manager. Beata Manthe is going to be joining us from Citi. And we're going to be speaking to the CEO of Sword Health a little bit later on. Watch that one. It's going to be a story that we're going to pay a lot of attention to.
7:14 here in London. Coming up in the programme, Donald Trump is OK with a weaker dollar, but former Dallas Fed President Robert Kaplan, now of Goldman Sachs, thinks more stability is needed, especially if you've got a lot of treasuries to sell. We will discuss that later. Plus, we're watching the entire European tech sector at the open after ASML's big beat. We're watching Nasdaq futures with that in mind as well. We'll also keep the luxury sector in focus. Up next, LVMH drops after some disappointing results. We'll get the details there. If you have questions, if you want to get involved in any of these conversations here on the opening trade, IB plus BBTV Go is the function to use. This is Bloomberg.
Wednesday the 28th, 18 minutes past the hour. This is what futures look like in Europe. It's interesting. Take a look at what you see when it comes to the Dutch market, and what you're going to see is a strong outperformance. Elsewhere, actually, it's a much more cautious picture. But individual markets that don't have ASML in it are likely to do different things to those that do this morning. In aggregate, what you are seeing is kind of the Stock 600, Stocks 50 going to do very well. Everything else is going to do quite poorly. The AEX is going to have a fantastic session. That's basically kind of the picture that we're looking at this morning. The gold miners might have a nice day as well. Maybe. We'll see what happens there. What else do you need to know? What is it? Wednesday morning, the 28th. The Fed is expected to hold rates after 3 straight reductions today, marking the US central bank's first decision since it was served with grand jury subpoenas. The Fed Chair Jay Powell holding a press conference. That's expected. It always is. At 7:30 p.m. UK time. Bond traders are expecting. Are we expecting a dovish policy shift? Well, maybe when Powell's successor arrives. The question is, who is that going to be? That might not be too far into the future, according to President Trump.
By the way, well, we have a great Fed chairman. I think we're going to have one. I'll announce it pretty soon. You'll see rates come down a lot.
Can he control the back end? The Softbank is in discussions to invest as much as $30 billion more in OpenAI, reflecting founder Masayoshi Son's ambitions to play a central role in developing artificial intelligence. Bloomberg understands that the Japanese company is in deliberations to commit more capital towards the fast-growing startup, but discussions are fluid, and the amount of funding could apparently change. Staying with a similar theme, South Korea has now overtaken Germany in total stock market value, powered by tech giants riding the global boom in artificial intelligence and robotics. The Kospi climbed to a valuation of $3.25 trillion after adding roughly $1.7 trillion since the start of 2025. Just kind of put those numbers in context. The surge has made Korea the world's 10th largest stock market. That puts it just behind Taiwan. So if you want to diversify away from America, are you diversifying to Europe? Maybe. Are you diversifying to Asia? Definitely.
That's what we've seen so far this year, isn't it? I mean, we've seen the South Korea story is wider than SK Hynix, but it's very much SK Hynix, and that's the story of memory chips. And the more that those businesses have to supply the hyperscalers and the build out of data centers, the less they can supply the memory chips, and that means that those prices have been on the rise, and certain businesses have been benefiting from that.
Will that be the theme that continues through 2026? And will software be the area, the tippy point of the spear when it comes to AI that is challenged? And we'll get some clarity with that, some answers, maybe, from
Microsoft.
You're looking sceptical, but we have Microsoft.
Microsoft is coming up. I think it's going to be fascinating to see.
And the stock performance of Microsoft has come off. It is a little unloved recently. As always with Microsoft, there can be a focus on Azure, so the cloud part of the business, but also Copilot and to what extent enterprise has been adopting. There's been some evidence that Copilot hasn't been adopted as quickly as Microsoft would have liked. And of course, they continue to spend heavily on CapEx. Meta's going to be interesting as well. They're losing when it comes to the models. They're winning when it comes to AI and hardware with the glasses. But it's the advertising business and to what extent that's going to perform for them with $600 billion of commitments from
advertising
through
and
the
CapEx,
decade.
very much still in focus.
Yes.
Let's talk about some of the corporate earnings we've already had out from Europe. LVMH, ADRs of LVMH dropped after organic sales in the company's fashion and leather goods division fell 3% over the holiday season. So this was US investors, US markets getting a chance to respond to these numbers, which broke after hours last night. We could see weakness then in the share when it opens in around 40 minutes' time. Let's bring in Bloomberg's Caroline Conan, who's got the details for us. Give us the top line then from LVMH. What's driving and what's dragging on the growth story, Caroline?
There is a tough comparison basis, which explains some of the weakness in these numbers in the fourth quarter. But if you look at the key unit, which is fashion and leather, 3/4 of operating income, including Louis Vuitton, Christian Dior, the organic sales are down about 3% in the fourth quarter. That is slightly below estimates. Of course, it's a very important unit. And when we had the third quarter earnings, obviously 3 months ago, remember, we thought we were at the end of the luxury slump, because at the time LVMH shares were showing a sign of a rebound, 12% in a day, but actually might not be the case quite yet. There's still a lot of weakness in China, and consumers are still reluctant to spend a lot of money on trendy handbags. Because if you look at the divisions, for example, the watches and jewelry division, that's interesting. is a very bright spot, meaning that some consumers may be more willing to spend on a gold necklace, given the strength of gold, rather than a luxury handbag. However, wines and spirits division, really difficult situation, minus 9% for the fourth quarter, when we were expecting just a drop of 1%. We had a story on cognac yesterday showing that division is suffering, especially you had a spat with China, and you have a general slowness, slowing down of consumption of alcohol more generally. So the cognac situation, this wines and spirits division, having a very difficult time as well.
Yeah, they need more watches. They need more jewellery, it seems. What does 2026? How does that set LVMH set them up for 2026 for the rest of this year, then, Caroline?
Of course, you got three main challenges: the wines and spirits divisions, as we mentioned, and of course the tariffs threats that are still going on in that division. You had Donald Trump as recently as last week threatening 200% tariffs on champagne, and of course LVMH has a lot of champagne brands: Moet, Dom Pérignon, Veuve Clicquot. Then of course you have the US rebound. How strong is that going to be? And in China, that is the biggest unknown. How strong is going to be the pickup in China? We had, for example, remember Burberry sales jumping in China, but if you look at LVMH, that region, excluding Japan, had organic sales going up just 1% in the fourth quarter. You also had the spat between Japan and China, leading to a decline, a drop in organic sales in Japan, as much as 5% in that quarter. Of course, we can also expect perhaps some boost in desirability for some brands, with new creative designers arriving, for example, at Fendi, at Christian Dior. So we'll see how that impacts sales in 2026. Bernard Arnault, the founder of LVMH, was doing the presentation last night, and he said it's very difficult to give predictions for the short term, but he does remain optimistic for the midterm. What he said is that 2026 is definitely not going to be a straightforward year.
Okay, Bloomberg's Caroline gone up on the numbers coming through from LVMH, a stock, of course, to watch this morning when trading begins at 8 a.m. UK time. Here's what else to think about then. Today in Germany, there's going to be a 10-year bond auction. Interestingly, Japan's 40-year auction was well received. Later, we are going to be seeing pictures likely from around 9 a.m. or thereabouts UK time. Prime Minister Keir Starmer in Beijing for that visit. Of course, 2:45 p.m. it is the Canadian rate decision, and at 7 p.m. it is, of course, the Fed rate decision. And we have the earnings from Meta, Microsoft, Tesla, IBM, Starbucks. So the focus for now is on ASML, but maybe that shifts to the earnings out of the US and that Fed decision as well. The press conference in focus. Rick Reeder, is he going to be taking over? What kind of questions are we getting on the investigation?
In some ways, what you can do is go to the photocopier, print the last statement, and just copy it and get the same one, and then maybe just play the same press conference. That's, I think, what a lot of people are expecting from the Fed. Normally, I'm very excited about the Fed. Anyway, the French Finance Minister next. This is Bloomberg.
Welcome to the programme, everybody. 7:30 here in London, 8:30 if you are Central European time, and that's where my mind's gone, because we've just seen some red headline come through from ASML. So as we look at the futures picture, which shows the Amsterdam market up by 1.4%, the CAC 40 down by 0.3%, that's ASML versus LVMH. As we think about that, just worth noting that ASML has said that it may cut about 1,700 jobs in the Netherlands and the United States. We talked to the CEO about this. Tom, you were asking a moment ago about this, and he said there'll be more details on it shortly, and here they are. Here are the details. But he did say that the company is doing great, but even great companies need to change and need to improve. So that's the characterisation that we were getting.
The need to be agile is what he said. So despite their performance and, of course, the massive beat that they had in the fourth quarter, they're looking to trim headcount, 1,700 jobs, as you said, in the Netherlands and the US. This is a major story for us this morning. ASML, of course, course, and its earnings, and it continues to power the upside in the equity space, as Anna was saying. Let's check in on bonds right now. It's also worth noting that the Japanese sale of 40-year bonds was well received, bid to cover ratio strongly above 2 and better than the previous auction. So that's led to some further relief in the Japanese bond markets, at least for now. And maybe there's a read across to what we're seeing over in Europe. Sovereign debt, of course, modestly bid in Europe as well. Germany's 10-year bund yields are down 2 basis points. In Italy, you're seeing a similar dynamic as well, BTPs. And we continue to watch OATs in France, of course. A little bit more political stability there. Yields down 2 basis points at 341. That's a check on the bond markets, sovereign bond markets of Europe.
We did also have a touch 120 overnight, euro dollar. It's quite significant. Big move driven by Trump. Bond markets bid this morning. Let's talk about the view from France. The French finance minister, Roland Lescure, shrugging off fluctuations in the yen after chairing the meeting of his G7 counterparts. The minister spoke to Lizzie Burden, Bloomberg's Lizzie Burden, exclusively a little earlier this morning.
France is on the view that it's up to the market to determine the value of the foreign exchange currencies. They base their analysis on fundamentals. I was on the market for 20 years before being in politics, and that's one thing I know is that foreign exchange market should do their job. Finance ministers should do their job to make sure that growth, again, is balanced, is secure, that productivity is strong, and then chacun son job, as we say in French.
But if this is a rapid exodus, Minister, of course it becomes a problem for you. Surely, are you worried about financial stability?
Well, financial stability should always be on the radar, and of course finance ministers and central bankers should look into it. Again, I'm not going to disclose the kind of conversations we have in camera, because that's the whole strength of the G7. But, so far so good. I think the world suddenly faces major uncertainties, but we haven't seen any unstable or rapid movements that are of concern. But obviously we're monitoring the situation, as we always have. We're aware of the movements. And again, we have to make sure that predictability and stability are the important words of what growth should be about now in the world.
And are members concerned about the slump in the yen? Can you rule out or indeed rule in coordinated G7 action to support the yen?
Well, when I look at foreign exchange currencies, as I did when I was looking at stock market or rates, I like to take a bit of a bigger view. And when you enlarge the focal and you look at the recent movements of the yen, you feel that the recent strength of the yen has been pretty small compared with the overall devaluation that has taken place over the last 18 months. Again, this is a trend that the markets are pricing in. It reflects different fundamentals in Japan, in Europe, and in the States. The markets do their job, and I believe they do it quite well, so we may as well let them do it.
The French finance minister playing poker with Lizzie Burden, playing his cards close to his chest, not giving much away. Is he worried about financial stability?
It's interesting you said we will absolutely not disclose things that happen behind closed doors at a G7 meeting. And I think President Trump tweets WhatsApp messages from world leaders. I thought we were in a different era now, but the French
have a different view of these things.
It's comforting to know that there is still some standards.
Yeah, trust in the markets was his take on the yen.
That's his standard, yeah.
There are standards to be upheld. Lauren Van Biljon joining us now, Senior Portfolio Manager, All Springs Global Investments. Good morning.
Good morning.
Are you worried about financial stability? Like, what's going on with the yen?
What is going on with the yen, indeed? It is a fascinating currency, isn't it? Because on a pure valuation front, it sticks out as wildly undervalued and has for quite some time. But then you look at the fundamentals underpinning it, and it's really hard for that currency to make any sort of headway. You've got this upside fiscal risk, you've got this sort of potential looming election, you've got monetary policy that is far too lax.
Yep.
It's a really difficult mix for any currency.
Is the dollar cheap?
I think the dollar's more neutral. I think it started last year pretty expensive after, a decade of outperformance.
Yeah.
We're probably now back to about neutral versus on a trade-weighted basis.
Does it get cheaper?
That is the question. I don't think it's going to be that same kind of blanket dollar weakness that we saw last year. But I think there are certainly some pairs where that move does look quite appealing.
Yeah, maybe not the blanket weakness, and maybe not stability, maybe volatility. President Trump talking about how he could have it yo-yo up and down if he wanted to. I'm not sure I don't know if people want it to or if he wants it to, but certainly he seems comfortable with weakness. Should that change our thinking, Lauren? Some people are talking about this being an excuse for another leg down in the dollar.
Yeah, and I think what's going to be interesting when it comes into how does that play into US monetary policy. We know we've got a new Fed chair coming in, right, and they will bring their own, perhaps, ideological slant to things. But there's also other reasons, sort of good reasons, to think that US rates could end the year lower than we think, than sort of current consensus is pricing.
Oh, really? Why that? Just because of the politics or something else?
Well, at Allspring, looking at the inflation forecast for this year, we think the risk is very much to the downside for the US.
What's driving that then? Because we spend a lot of time talking about commodity prices going higher. They might not be significant enough, but what's the story?
I think rents and sort of housing is a big one. I think the path there looks actually quite sanguine into year end. And that keeps us sort of quite positive actually on inflation in general. And if that's true, if that plays out, or at least if that's where the risks lie, there is a path there where US rates could be lower than the market is expecting, but for good reasons.
You're kind of lining. Sorry, it just sounds like you're aligning with Stephen Myron on this, who's kind of calling for another 150 basis points of cuts. The dot plots, of course, have one cut for 2026. The markets are pricing in close to two. What are you calling for three? I mean, there's a view that Rick Ryder, if he's nominated, gets three done in 2026.
Yeah, I think base case is probably 2 to 3, but what I'm talking about here is that balance of risk, right? Is the risk more that it's 1, or is it sort of the risk, the tail risk that it's sort of 4?
Do you think markets are underpricing how far the Fed's going to go?
I think there's potential, or that's where the risk lies at least.
So you're not worried about inflation?
We always worry about inflation with bond investors.
But in some ways, if you plug the rent story into the CPI number, you end up with a number that could be artificially low. That the CPI number is, because of the lagging effect of the housing market, you could end up with the CPI number that is the last to show what appears to be a pickup in inflation right now. And that actually the inflationary trends, that the affordability crisis, all of that sort of stuff that Americans are worried about actually is pushing grocery prices higher and all these other things that Americans actually care about.
Yeah.
Isn't there a danger that CPI, if you just look at the rent factor, is misreading the inflation outlook in America?
I think it's a good point about that US. We talked about that K-shaped recovery, right? And that K-shaped sort of household sort of prospects in a way. And it's true globally. I think it's very acutely true in America. But certainly, I think there's a path here where US inflation is back at 2% by year end.
We're going to linger on the inflation theme for just a moment because I'm so interested in this, Lauren, because we've just had numbers out from SK Hynix, and they're seen as one of the standout beneficiaries of higher prices for some components that go into a lot of the technology that we buy. And I was just reading an opinion piece overnight suggesting that the price of all consumer goods could be going higher if AI data center rollout is competing for chips with the consumer sector, then consumer goods are going to cost more. But it sounds like none of this is going to affect your view on inflation. You're pretty confident then that...
I think it's all about timing, right? And it's how all these consumer goods, where are they in their supply cycle? What are stocks looking like? It might only maybe we only see. Yes, I think this competition for chips always worth keeping an eye on. But I don't think it's clear when that plays out. Right? It might not be Q1, Q2. That might only be end of 2026.
SK Hynix is reminding us this morning, as Anna is saying, with these earnings, that it is the poster child, or the new poster child, it seems, around AI, particularly in the hardware space. Do you continue to see that divergence between hardware and software? How are you playing the AI theme for 2026?
I mean, I'm more in the sovereign bond space. So sort of, for me, the AI, where I'm most fascinated is what it's going to do to productivity, and how much of growth right now is it driving,
and when does it do those things to productivity? What's the thinking there? Because that could have an impact on sovereign bonds.
I mean, that's the exciting part, because productivity in the developed world has really lagged. Right, that growth has been slow for quite some time, and maybe this is what gets us to that next over that hurdle and into more. Is
a cheap dollar inflationary for America? If the dollar depreciates significantly, I guess it's a reasonably closed economy.
I mean, reasonably closed economy, like you say. At the margin, yes.
Should be. Yeah.
But if I suppose oil prices are behaving. Yep. Which so far they have been.
But all the other commodities aren't.
Yeah.
So gas prices are all over the place. Yes, oil's come down, but it feels like it's stabilising at the moment.
Yeah.
And the base effect may kind of not be that great, but everything else seems to be going up.
Yeah, but I think the US is, like you said, it's fairly close, fairly self-sufficient.
What about, we've had these comments coming through from one policymaker at the ECB overnight, talking to the FT, saying that these moves in the dollar against the euro, there could be a reason. There's a lot of caveats in there. He's saying he's happy with where policy is right now, but there could be reasons to cut if the euro keeps on gaining. Is that something that is... I mean, at the end of last year, we were talking about reasons to hike at the ECB. It seems like the direction of travel is not clear. Maybe on hold.
This coming from an Austrian.
Right, yeah, well, there we are. That's important detail. Yeah. So, I mean, how are you thinking about the euro ahead, then, and the year ahead for the euro?
I mean, we did have the sort of 120 as our target on euro-dollar as some way to sort of take off some risk. So I'm quite pleased to see it there today.
And was that your target for the year?
Well, it was the target for last year, which bled into this year, which just seems to be how things go. I think short term is not a bad place to take some profits, reconsider, and kind of reload. Again, ECB, that base case seems to be on hold, but again, it's about that balance of risk. And yes, probably on balance, that it's a Europe that's more likely to ease than to hike again.
It's great to see you. Thanks for stopping by. Busy morning, so much to talk about. Didn't really get on to even what is happening in the gilt market, what's happening with OAT. There's so much going on. Lauren Van Biljon, Senior Portfolio Manager at All Springs Global Investments, Tom.
Let's get you up to speed on those SK Hynix numbers. And as Anna was saying, look, there is potentially an inflationary impact of this because SK Hynix, with, of course, that focus on high bandwidth memory, HBM, that accompanies those AI accelerators, saying that they are seeing relentless appetite for AI memory. In terms of the redhead that crossed fourth quarter operating profit, a big beat, 19.2 trillion won. The estimates had been for just shy of 17 trillion. So a significant beat in terms of the fourth quarter. They expect a considerable increase in 2026. CapEx guy was talking about the CapEx spend from TSMC when we were in conversation with ASML CEO at the top of the hour. And in terms of revenue, more than doubling. High bandwidth memory revenue more than doubled year on year. Again, the view from many is that this continues, the tightness around high bandwidth memory continues into 2027.
Yep.
I thought that was really interesting, that conversation, because, yes, I had also, we've been noting the TSMC comments about, you're spending a huge amount of money. Yeah. This is going to make you nervous. And so asking the ASML boss the same question, and yes, he acknowledged, if you're not nervous, you're not being responsible. You're going to be a bit nervous when you're making the kind of CapEx plans that these businesses are making, and seeing those orders come in must be very reassuring for ASML.
Do you think people in the stock markets are feeling that they should be nervous? I don't know.
NASDAQ up 0.9%.
Well, precisely.
So
this
is a good double punch for the AI theme right now.
It is.
SK Hynix, ASML, both beating.
A punch being a good thing.
Being a good thing?
Yes.
This is a positive punch. punch.
That doesn't sound good.
Delivering the punch, maybe. Anyway, it's going to be interesting to see the divergence today between kind of old school and new school. France versus the AEX, the CAC versus the AEX this morning.
We're going to do a bit more of a deep dive on ASML. The record order score smashing estimates, as we've noted. The company says it could cut about 1,700 jobs despite that. A look at what to expect when the market opens just ahead. Stay with us. This is Bloomberg.
Yes, it is true a weaker dollar boosts exports. However, we have, in the United States, has 39 trillion of debt on its way to 40 trillion plus. And when you have that much debt, I think stability of the currency probably trumps exports. And so I actually think the U.S. is going to want to see a stable dollar.
Goldman Sachs Vice Chairman and, of course, former Dallas Fed President Robert Kaplan there giving his view that stability in the dollar would serve the United States better than a weaker dollar. Let's get the thoughts of our Markets Live Executive Editor, Mark Cudmore, who joins us now. Mark, good morning to you. So how much new information do you think there is in what President Trump had to say about his comfort level on a weaker dollar?
Not much. It's hit a market that was vulnerable already. We've been talking a lot on the show recently and over the longer period of time that, dollar is in a structural downtrend that started at the start of last year. We kind of paused a bit in the second half. We talked a lot about how we expected 2026 to be another year of depreciation for the dollar. It obviously was particularly weak in the wake of those dollar-yen rate checks last week. And then suddenly we got this comment which kind of encouraged a market that was vulnerable. But really, there's almost no informational value, and it should be probably completely discounted. What I mean by that is Trump's, welcomeness to a softer dollar is not new. He's constantly expressed that. And as Robert Kaplan outlined, Trump wants to remake the US as an industrial powerhouse, but in reality, it's financial services is power. And so therefore that trumps the kind of export spaces as Robert Kaplan outlined. But that's not how Trump sees it. So this isn't a new view from Trump. And I think that in context of the latest dollar weakness is with the context that Trump's policy has been slightly undermined. He had to backtrack on Greenland. He's kind of slightly de-escalated when it comes to Minneapolis. He threatened Canada with tariffs that was kind of ignored. He threatened Korea on tariffs, and the stock market boomed. So in the context that his comments are being slightly undermined, why are we suddenly putting so much weight in him reiterating an old view? I don't see why. So for me, I am bearish the dollar structurally, but I don't think this is a reason to sell the dollar.
Mark, there's so much going on. My head is spinning. I'm trying to get a handle on kind of where's north. Are we comfortable with the level of risk in these markets? How over our skis are we? How unbalanced do you think everything is out there?
I'm really struggling with this, Guy, and the kind of the trader inside me, the trader background in me is a little bit nervous by the pace of gains. We talked a little bit on the show yesterday about how we think that the macro backdrop is very supportive for global investors. We think the rest of the world continues to outperform the US, and we think that's a dynamic with legs. So everything that's happening makes fundamental sense. But just really the pace of gains in many assets, it just is unsustainable, and it's crazy. But what's going to turn it around? I'm not expecting the FOMC to be the event. I'm not expecting earnings to be the event. So basically, I'm a little bit nervous here as a trader, and I think it's very hard in short-term moves. But as an investor, I wouldn't panic yet. It's not a reason to suddenly go, this is over the skis just yet. At some point, that will come.
Was any of your panic assuaged, Mark, by the auction, the 40-year auction in Japan?
Yeah, actually, that's a good question, because I thought that was going to be one of the main catalysts this week for risk. And actually, that went really well. And so that's a real positive. So it seems like we're not going to attack the bond market this week. If we are looking for a vulnerability in the kind of whole infrastructure, something that kind of flows through various asset classes, it would be if the bond market comes under attack again. But in fact, the bond market's been incredibly stable over the past few days.
OK, and we're seeing that again today with yields down across the curve in Japan. Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, thank you. Remember, of course, you can get up-to-date analysis and insight from Mark and the rest of the fantastic team. Just go to MLIV Go on your terminal. Let's bring Chloe Mellett now with some stocks to watch. And I suspect maybe ASML is on the list, Chloe.
It absolutely is. Good morning, Tom. It could be a very good day for ASML. Fourth quarter bookings were nearly double what analysts had expected, and the company also announced a big 12 billion euro buyback and also announced some job cuts to streamline, to simplify those operations. And so this could really lift the shares this morning after what has been already a very impressive rally in that stock. And the CEO has also said that clients were becoming more and more optimistic about the sustainability of this AI demand, which of course explained this record order intake and also bodes really well for the coming quarters for the company. Moving on to LVMH, and we could see a little bit of weakness there after sales came in below expectations. The CEO said the company was operating in quite a difficult environment, and that means that 2026 will not necessarily be straightforward. And so this could come in as a bit of a disappointment, especially given that Burberry and Richemont in that luxury sector have actually provided quite upbeat outlooks. And so we could see LVMH shares continue to outperform some of those peers, as they have been, as we can see here, over the last few months. And finally, miners are always and still in focus. Gold has just hit another record as investors continue to rush to safe haven assets, continue to flee sovereign bonds and currencies. And of course, this precious metals rally is great news for all of those companies, for those gold miners. But as we can see, they've already been having a fantastic year. So we'll see how much more they can really extend those gains.
Chloe, thank you very much. Chloe Mellett from our equities team. The European Open just minutes away then. AEX futures up by 1.4%, CAC futures down by 0.5%. And that's the two big corporate stories in the market. It's fully reflected
I think
there.
It's such a fascinating day today. I really want to see if we can get an answer, at least if not by the end of today, then by the end of this week, in terms of whether we're really getting a split from the software versus hardware. We've seen that, of course, reflected in terms of stocks. But are we seeing continued questions around the capex spend from the hyperscalers and whether or not they're able to ship their AI products at the same time when SK Hynix and ASML have both confirmed in the session today that at least in the short to medium term, the strength and the sustainability is there. And at what point does that gap close? So we may have some more answers by the end of this week.
What I'm surprised about is the stock market's roaring. Risk is on. Everybody's feeling good. Yet LVMH is not selling handbags. And not selling luxury goods.
They are selling gold, but not enough to compensate for the lack of handbags being sold. But yeah, that tells you something about where people find safety to put their money right now.
Does that imply, maybe I'm taking this too far, does that imply that people are not confident in this stock market rally?
And you'd have thought with the K that the top of the K might be spending on that kind of stuff.
But are they not? Are they being more cautious because they worry about what they see in front of them and the kind of the crazy market moves that we're getting?
The different units of the business are interesting, to your point. So they're buying jewellery, they're buying watches, a little bit more discerning, even at the top end of the K. But of course, luxury has its own idiosyncrasies.
There's intrinsic value with some of that stuff. To Anna's point, kind of what happens, is my gold watch worth more
than your handbag?
Well, precisely.
Possibly. Coming up on the programme, we will bring you the market open Wednesday the 28th of January. AEX versus CAC this morning. This is Bloomberg.
To be honest, the back end of yesterday's US session wasn't that exciting. So I've binned that chart and we've moved on to this chart. And we're going to show you what is happening with NASDAQ futures right now. This is the ASML effect. It is a huge day for tech on both sides, on all sides of the globe. Does the globe have a side? But everywhere, tech is in focus. In Asia, in Europe, and in America a little bit later on. That's ASML when it posts its numbers there. That is lifting NASDAQ futures stateside as a precursor to maybe what we see a little bit later on as big tech starts to report, Tom.
Yeah, the Dutch are stealing the limelight, at least for now, Guy. So you're looking at futures pointing to build on the gains, around 0.4% that were notched up by European stocks yesterday. So across the benchmark, Stocks 50 futures looking to add 0.3%. But here is the split. It is France versus the Netherlands. It is ASML. Expect the semiconductor names to get a significant lift on the back of that massive sales number and orders number for the fourth quarter from ASML, pointing higher than the AEX by 1.4%. On the downside, LVMH a drag. Let's see how that affects the broader luxury space. The CAC current called lower by 47 points.
Let's tell you a bit more about some of the stocks in focus. Tom, you've alluded to some of these already. So ASML certainly will be one that we'll be watching. We'll watch how that ripples through into other semiconductor names, though, in Europe. That'll be interesting to see how widespread is the positivity. We spoke to the CEO. He was very positive about the business, certainly the clarity that they've got from some of the big spenders on their kit and indeed the hyperscalers at the end of that supply chain. So that's interesting. They're also cutting jobs. LVMH in focus. We talked about the areas of weakness around fashion and the handbag side of things. There is some more strength in jewellery, but maybe that's not enough to offset. And Volvo trucks in focus as well. A slightly more positive line coming through them. There's slight improvement in some markets recently, stabilisation in several markets. An interesting line to watch, Guy.
OK, here we go. ASML versus the CAC currents. Are we going to see how big is the spread? How big is the outperformance we get from the Dutch market? How big is the underperformance we see out of the CAC currents on LVMH? And maybe that spreads through into the rest of the luxury space. At the moment, we have to contend with what is happening with the FTSE 100. That's the commodity trade. Are we going to see gold represented there as being a positive story? Are we going to see some of the basic resources stocks going higher? Stock 600 is down. But we're waiting. We're waiting to see how ASML opens this morning. The AEX might take a few moments to get going, but the CAC has already got going, and it is down by 0.7%. So weakness in France this morning on the luxury front. Is that going to affect other markets? Maybe Switzerland could be affected by that as well. But let's see how the AEX opens. It could take a little while, I suspect, to get the Dutch market going this morning. ASML is a huge part of it. Are other chip stocks going to be moving as well? On the upside, it looks like we're probably going to be seeing some upside performance coming through from that space. But I've got to wait. The moment has not yet arrived when we see how big a day the AEX is going to have and what that is going to mean. But NASDAQ futures sharply higher. AEX futures sharply higher. Tom.
Tech as a sector gaining 0.4%. Basic resources, to your point, around the FTSE 100 gaining 1%. That's top of the list right now. We'll see how that changes on the tech story as we get the print. ASML is currently halted, it looks like, so brace yourself for a big pop higher for that stock. Energy, of course, gaining 0.8% as well. LVMH tumbling around 6%. So that's the drag. Consumer as a sector, the biggest loser, down 1.7%, Anna.
Yes, and it does seem as if the LVMH story is rippling through others in the sector. So that stock down by 4%. Christian Dior also down by over 4%. Kering down 3%. Moncler down 3%. Burberry also weaker. Richemont not so bad. And we'd already heard from them that they, with a slight more leaning towards the jewellery side, maybe a bit more cushioned from some of the trends we're seeing. But that's the luxury side of things, and consumer products and services, into which luxury falls, is the weakest performing sector this morning here for European stocks. Basic resources and energy doing better than technology so far today. But to your point, Tom, we have not got ASML just yet because it is still halted. But the rest of the tech sector, a lot of it at least, going higher.
What is interesting is pharma's also getting hit pretty hard this morning. So some of those names definitely pointing on the downside. So LVMH down by 4.2%, but Roche, Novo, Novartis, Astra are all down pretty sharply as well today. So the pharma trade is under pressure, but I'm waiting. Infineon has just opened. Infineon's just opened 6% higher.
Yeah.
So the chip story in Europe is getting a positive read across from what we're seeing with ASML. It's a tale of two companies today, and the ripple effect that they're causing in the European space.
Yeah, Infineon up 6.6%. ST Micro over in the CAC current, of course, up close to 6% as well. ASM International over in the Netherlands up 3.9%. Again, ASML shares halted in Amsterdam after that record quarter. The moment we get the print, we'll bring that to you, of course. But we can broaden out the conversation now.
Yeah, absolutely. Let's bring into the conversation Beata Manthi, Head of European Equity Strategy over at Citi, and the perfect voice to have with us this morning as we're wrestling with a lot of themes in equity land. Beata, thank you very much for being with us. Let's start with the strength that we're seeing in European tech today. You, not long ago, last week, was it, downgraded overall expectations for European stocks, but you still see some upside this year. Where does tech fit into that? Because it does seem as if Europe has a part to play in the phase of tech strength we're in right now.
Absolutely. So what we've done a week ago, we've changed our preference within the rest of the world. So we continue to see the diversification trade being strong this year. But what is happening in the euro-dollar and the tariff risks re-emerging, and you can see from the consumer stocks today, the demand, the international demand is still not there. That all puts a crack in the entire delivery of EPS in Europe this year. So last year was easy. Investors were very bearish, valuations were low, the market was pricing EPS contraction, right? Well, we knew the EPS was going to be under pressure, but nothing what the market was pricing in this year. Of course, last year the market has re-rated ahead of this delivery. Analysts have had 11% expectation for this year for EPS. We have 8%. Still very robust.
Okay.
We haven't changed any assumptions.
Yes.
We continue to have the same target. It was, as of December, was 11% upside. It's probably 5-6 now, so that hasn't changed. But I think what is happening geopolitically around the world really re-emphasizes the domestic trade in Europe that potential is going even stronger, and fiscal delivery issuance. But the international story, and this is where the broadening was based on, that has cracks, and euro-dollar in the near term could be a problem.
Okay, there's a lot in there, Beata. You didn't mention tech. I asked about that, but
yes,
that's fine.
I will.
No, we'll get back to tech then. Let's linger on the broader theme, because it seemed as if the time when you downgraded stocks was when we got the tariffs threat. Then the threat was removed, but it sounds to me like you were downgrading stocks for other reasons. It wasn't just that President Trump was threatening tariffs over.
It wasn't about the tariff. It wasn't about the tariffs.
So you're not tempted to upgrade now as a result?
No, it was never about the tariffs. It was really about the new world order, what happens to the currency, what happens to the international trade. And we re-emphasize, actually, for the domestic story. So perhaps investors have to be selective, just like they've been last year. So Europe has done very well, but through a narrow set of sectors and stocks, right? It was domestic story, and the international story has been under pressure. This year, probably it won't be under so much pressure, and we see from tech today that's an international story. Yeah. Sales are amazing. AI trade is well and alive, and we see confirmation of that from around the world. So Korea earlier on, Taiwan, right? It's all happening from the US, probably. We are going to have very positive reporting season. So we are still very bullish AI, but we also think that this AI trade is broadening. It has already broadened to EM last year, so EM is our top pick globally. Europe is only neutral, so we've downgraded the preference, basically, swapping it with Japan. But going forward, really, the investors' focus should be on delivery. Tech is delivering, right?
Tech is delivering. We're seeing that reflected in the ASML share price right now. So popping 6.5% to a record. This is a market cap of above 500 billion right now. So it's by a long stretch the most valuable company in Europe. We won't get into name specific companies, but does European tech have a bigger role to play in the AI theme this year?
We think Europe overall has a bigger role to play because we think it's not only broadening, but investors' focus is starting to shift to the question, is it working? So from enablers to adopters, this is one of our big themes. Of course, enablers and what we are seeing in the European data today, that's a catch-up trade, right?
Yeah.
And
but adopters, that could be finance, banks.
That is a very broad base of sectors.
Okay.
And for us, physical AI, that's, of course, big focus. You focus on, in that space, on industrials, big sector in Europe.
That's robots.
Yes, that's
very exciting.
That's robots. But, industrials are at the crossroads of where the AI is going and where the money is coming from Europe, right? So the fiscal stimulus going a lot into that sector.
Do they have to be domestically focused industrials that are adopting AI? Because you pointed to your concern about the internationally exposed European companies.
So the industrial space, yes, for the first question.
Okay.
Now, there will be names that we have in our basket of stocks for the fiscal delivery that will benefit a lot from the fiscal. They will be receiving orders. They are already receiving orders, but they also have international exposure, right? So it's a bit of a mixed bag. However, the domestic story, of course, have been overwhelming on their performance. So industrials, basic resources and banks, our top picks in terms of sectors for Europe. Within tech, we are bullish semis, but software not as constructive as on semis. Let's put it this way.
Can I just come back to this idea that the euro is a negative for Europe? Because I don't really understand it. Because if I'm a US investor, like the FTSE 100, up 2.82% so far this year. In dollars, we're up by 5%. I'm a US investor. I'm looking at Europe. Looks great. Asia looks better, maybe, in terms of the performance we've seen so far this year. So why is the euro a negative? I get it from a kind of bottom-up perspective, but from a top-down, why is that the case?
You're right. From top down, as I said, what is happening, it's only reinforcing the case for diversification. Because if you're a US dollar investor and you think your currency is going to weaken, of course you're searching opportunities outside.
Do you think they're going to?
So that's going to continue. Our models point to, and this is the feedback I get from the investors, that at the top of everybody's minds are the emerging markets right now. Yeah. Right? This is where everybody is focused. Europe is secondary, but more selective. So investors see upside in the domestic story. Of course, euro strength helps the domestic story, but really it's not very helpful for the international story. That's all. Europe has done very well in this type of environment last year, right?
So why would I put money to... OK, let's go back. Why would I put any money to work in Europe if I think that Asia is going to outperform? Asia has all the pieces in the puzzle. So what's the spread going to be?
Well, look, within the Asia or emerging markets, our top recommendations are for Korea, for Taiwan, and also for South Africa, because that's the gold trade, right? Okay. But we are going to EM, investors are very concentrated in AI. Of course, it's doing great now, but we know it could be a volatile year as investors move from one winner to another winner, and that shift produces volatility. So our view is you want to diversify. You don't want to have all your money in AI. It is a very important theme, but there are other themes going on. You just follow the money. European governments are spending a lot of money on fiscal, right? Why not putting a bit of money into that?
And recently I was reading that the MDAX is not keeping up with the DAX in terms of factoring in the benefits that fiscal spend brings. Is there a smaller cap story? We've seen actually that since the start of this year, there was a smaller cap story in the States playing out. Absolutely. Is there a smaller cap story here? Because that's more domestic.
Absolutely. That's been our top pick at the start of last year. It has fizzled out a bit towards the end of last year because the international story, large caps have started to outperform. But when I look at the earnings prospects for this year, they are double of DAX, or earnings prospects for mid caps in Europe, broader Europe, double than
Why
for
is that
the
not
large
being
caps.
priced? Because the Germans haven't spent as quickly as we thought they were going to. Does it all come through this year?
I don't know. It depends what you were expecting. Perhaps the expectations were too high, right? It was the issuance has, like, the budget has been only approved in September. The issuance has only started in October. Actually, what they are doing is not bad. And when you look at the data of industrial production, factory orders, domestic factory orders, they are beating expectations and picking up. But we are only starting that process now. Fiscal is only starting to be expansionary this year, and EPS has been under pressure last year, right? So.
Beata, what do you do with the UK? Guy mentioned in dollar terms the upside for the FTSE 100 about 5% year to date. What do you do with the UK equities?
So
they're very cheap, even after the big gain.
Be selective. Nothing is cheap anymore versus its own history, right? They are cheap in relative sense versus the other regions. So what we like within the UK, basic resources is one of our top picks. Banks, of course, and industrials, defense stocks, right? The UK, the FTSE 100, has the highest share of defense stocks as percent of market cap out of any other.
Defense, not defensives.
Defense. Actually, defensives, it's 50%. That's a headwind if you want cyclicality, if the market wants cyclicality. But defense is almost 10% now.
Is dollar revenue an issue for FTSE?
It is the most internationally exposed market in the world, right? 80% comes from abroad. So depends what happens to the euro pound going forward. That's definitely a big driver.
Euro pound, not.
Sorry, pound dollar. Right. Pound dollar.
Cable.
Too many crosses.
But it feels like currency. Is this a fundamental market, or is this a kind of macro market?
It's a bit of both. We've had very macro and geopolitical market at the start of the year. That's going to continue. Like we will see more of that playing out throughout the year. But because valuations are so high, the focus has to be on fundamentals delivery. This is why you see the reaction you see in the reporting season, right, to the numbers. So that's all eyes on earnings, definitely.
I'm going to sound like a broken record now. Do your homework, seems to be the story. Beata, thank you very much indeed.
You.
Nice to see you. Beata Manthe, Head of European Equity Strategy, joining us from Citi. The core looks like this in Europe. There you go. Pharma's down, luxury's down, defence is down, tech is up. ASML is up by 6%. Schneider's up by a little bit. Some of the staples are actually moving sideways today. Nestle's not having a bad session. Let's look at the individual moves. I think we're going to start with the chip space. Chloe's here with more.
Good morning, Guy. Indeed, it's a great day for the chip sector here in Europe after ASML reported record fourth quarter bookings. They came in almost a double what analysts had expected. And the company also shared quite an upbeat outlook because customers keep spending money on AI. And therefore, there is growing demand for ASML's tools. And we are up almost 6% on the back of those really positive results, really positive outlook for ASML. And it's driving up the rest of that sector. And in particular, ST Micro is up here about 4.6% this morning, but we are green across the screen there for that chip sector. Moving on to the luxury sector, where we are red across the screen this time, and that is after LVMH dragged down the rest of that sector. So LVMH reported sales below expectations, and the CEO said that 2026 will be a little bit difficult, that it was a difficult operating environment for the company. And so after we saw quite a lot of investor optimism in that luxury industry at the start of the earnings season, we're seeing that reverse now, and we're seeing quite a lot of red there across the screen. Christian Dior is down, Kering down, Burberry down, all in the red today. And moving on, but staying within that same luxury sector, but focusing in on a smaller player, and Ferragamo is also down about 5%. It also reported earnings after the close last night, and analysts said that its wholesale segment was particularly weak, and so sales disappointed as well there. So we are really seeing weakness across their luxury sector. And finally, let's end on miners. We are used to seeing them in the green. They are still in the green today after gold hit another record as investors continue to rush towards safe haven assets. And so we are seeing that reflected in some positive movements for all of those miners, and Anglo American in particular up about 2.6% this morning.
Chloe, thank you very much. Chloe Melly with the latest on those movers. Let's just throw into the mix what we're seeing on healthcare. Chloe was talking about luxury names going lower. Well, the second worst performing sector is healthcare, and that stood out to us as interesting, so we're having a bit of a deep dive into that. But this is the extent to which we're seeing some weakness coming through on these healthcare names. Suggestions from the team so far, there's an FX effect perhaps of the weaker dollar. If you're a dollar earner, dollar revenue, it could be an area of concern. US politics could be playing in here as well. It was interesting. I was wondering whether it was just a move out of a defensive sector into a more risk-on technology sector, but actually, sector by sector, we're split half and half. So even though the tech theme is so strong this morning, we're half and half, positive and negative across European equity.
We're going to get more context on that.
And the
theme.
SOX 600 is entirely flat.
Yes, it's a reminder, isn't it?
News.
Can I just? Is it a dollar translation story? These guys, the US pharma market is the biggest pharma market in the world by a country mile.
Yes, exactly. That's what I was saying. So one of the suggestions being their dollar revenue, and that weighs on the sector.
Well, it's a reminder with our conversation with Bianca Mante, isn't it? In terms of her view is, and she zeroed in on euro strength and dollar weakness and what that means for the earnings story for European corporates, even as she sees that domestic strength story. On tech, then, we're going to get more details in terms of ASML. Here's the tease for you. Coming up, smoking hot chips. They don't actually make the chips, of course, but they make the equipment that goes into making the chips at those fabs. Record fourth quarter orders at ASML as the AI boom spurs demand at Europe's most valuable company. We'll bring you the context, the analysis. That's coming up. This is Bloomberg.
Welcome back. You're watching the opening trade. We're 20 minutes into the session. If you are invested in the chip sector, you're having a good morning. If you're invested in the luxury sector, you are not having a good morning. That is basically the skinny on what is happening in these markets. There's a gold trade out there as well, but that's basically the theme.
The skinny. I like that guy. Yeah, the losses, in fact, for LVMH are bigger than the gains for ASML right now. But, of course, the market cap is significantly more in the favour of ASML, above 500 billion. The gains now 5.3% for that stock, having been higher at 7% at the start of the opening trade. ASML shares then surging, of course, after the Dutch semiconductor equipment maker reported record bookings for the fourth quarter, and a new share buyback programme. In the past hour, ASML has also announced plans to slash around 1,700 jobs. Let's bring in Bloomberg's Charlotte Hughes-Morgan, joining us out of Amsterdam. Charlotte, what really stood out from you, from what we've heard from the CEO and from these numbers, in terms of how this company is looking forward?
Thanks, Tom. Yeah, I mean, that booking number smashed through all the expectations that we were seeing coming in to this quarter. And expectations were high. I mean, ASML's share price was already up around 32% since the start of this year. But that 13.2 billion euros in booking really signals just how strong the demand is for ASML's chip-making machines. And remember, ASML is the only company capable of making this cutting-edge lithography machines that produce the sophisticated chips that are powering the AI boom that we're seeing. And so what is driving this record number? It's sustained demand for artificial intelligence. And ASML CEO saying in the statement, look, our main customers, so that's all the major chip makers, TSMC, Intel, Samsung, are really positive about the medium-term market perspective here for AI. They are digging in, they are investing in increasing their AI capacity. You know, we've seen stories about billions poured into data centers and other AI infrastructure, and that's really translating into strong bookings for ASML. And they expect this to continue throughout 2026. They released Outlook that again topped estimates. They expect sales to continue growing, and demand for their most sophisticated machines, the EUV machines, is driving this. It's particularly strong. So that AI demand story is sustainable, I think, is the message from ASML's leadership today.
So, Charlotte, is it a surprise that the company has also announced job cuts this morning? Where are those job cuts coming? What do we know?
So what we know, yes, ASML released a statement at 8:30 CET today saying they would cut as many as 1,700 jobs. That's around 4% of their workforce, and most of those job reductions will take place in the Netherlands, where the bulk of their operations are, but also some in the US. And what ASML said is that these job cuts will primarily be at the leadership level, and they are basically doing this because they've received feedback that the organisation is too complex. It needs to be more agile, and so they are reorganizing their technology and their IT business units. And as a result of that, there will be some of these job cuts along the way.
Charlotte, thank you very much. Bloomberg's Charlotte Hughes-Morgan from Amsterdam. Let's head to Paris now. LVMH reporting a drop in sales for a key fashion unit over the holiday season due to sluggish demand. Bloomberg Intelligence says the luxury conglomerate's second-half margin beat doesn't match the consensus optimism for the year. So joining us now, Bloomberg's Angelina Rascouet in Paris. Angelina, what were your key takeaways from this earnings? A tough day to report up against ASML.
Yes, indeed, Anna. I mean, basically, I think analysts were struck by the cautious tone during the conference. Arnaud said 2026 will not be a straightforward year, that it's difficult to predict the short term. The fashion and leather goods unit, I mean, there's a lot of hopes right now because there's been quite a few creative changes. But right now, it's too soon to tell if Jonathan Anderson will do the trick at Dior because the products are not really available just yet. The bright spot was watches and jewelry, and in particular, Bulgari.
The spirits unit was badly hit as well. If this is a structural shift in terms of our consumption of alcohol, this is going to be difficult, presumably, for LVMH to turn around.
I mean, wines and spirits, yeah, it really disappointed. In the last quarter, sales fell 9%. That was much worse than expected. It's a tale of two stories, basically. Champagne demand is relatively flat. But cognac, which is really dependent on the US and China, is really suffering. There's a crisis of demand there. In the US, there's a cost of living crisis. People are just not consuming and they're trading down. So we went to the cognac region last week. We wrote a story for Business Week, and basically producers are trying to adopt drastic measures to reduce the elevated stockpiles of eau de vie, which ends up being cognac, and it's a little bit like OPEC. When OPEC, when prices collapse, they cut production, and cognac producers are basically doing something similar.
Angelina, thank you very much indeed. Tough day to be LVMH. Tough day to be in the cognac business. The view from Paris. In terms of what we're seeing, the Stoxx 600 is going nowhere this morning.
It's staggering, isn't it? With the AEX up by 1.2%, with the optimism around tech.
So ASML is adding 1.18 points.
Yeah.
LVMH is subtracting 0.49, but there's the sector effect, which is enormous. And luxury is a huge kind of sector story.
It's hardware versus handbags right now. Is that a healthy shift for Europe, longer term?
Yeah. Do we have enough of one and too much of the other? I don't know. Coming up next, we're going to talk about what's happening in AI and the healthcare perspective on the AI story. That's next. This is Bloomberg.
Happy Wednesday. This is the opening trade. We are 30 minutes into today's session. Across the benchmark in Europe, flat. But that is not telling you the story. What is telling you the story is the AEX. What is telling you the story is tech as a sector driving high. That is the biggest gainer. It is handbags versus hardware, and hardware is winning out. LVMH is a drag on the CAC, currently down 0.8%. The DAX is down, gaining 0.1%. There's the softness, though. It's the luxury goods makers. That is the concern on the handbag side, but it's the hardware that's proving strong for Europe. The FTSE 100 here in the UK also benefiting from another pop in gold, up 0.2%. Guy.
It's amazing, isn't it? This is not a top-down market. The top-down story tells you nothing this morning. If you take a look at the Stoxx 600, take a look at the numbers, it doesn't really give you an idea of what is going on because it's an offsetting market. One set of stocks offsetting the other set of stocks. 303 up, 278 down. Weightings matter this morning. Volumes a little on the light side, but not by much. Let's talk about where we're seeing the strength and where we're seeing the weakness. ASML obviously is the big story. The lithography story, the chip equipment maker is having a fantastic morning on the back of its numbers. We've faded a little bit in terms of the early moves. We're up by 5%. Infineon, yes, there's other factors going on this morning, but Infineon is a derivative of that story this morning. The chip space in Europe is having a positive session. Volvo is up by 2.28%. Bit of demand maybe coming through from trucks. Is that a signal that the economy globally is getting better? that the shipping story, the logistics story that we'd seen weakness in is now starting to improve. Is that a macro signal we get there? LVMH is weak. We know what's happening there. Tom's just talked about what is happening on the handbag front. It's the leather goods that we're seeing weakness in. The pharma space is weak this morning. Roche and Novo are both down. Now, remember, one reports in Swiss francs, the other one reports in dollars. So can I park the dollar effect out of that? What I'm hearing is that maybe actually what we're seeing here is an effect of the renegotiation under the Inflation Reduction Act, Biden's Inflation Reduction Act, and that is what is affecting the pharma space here in Europe. But we're open to answers on a postcard on this one as to why these stocks are down. But remember, different pharmas report in different currencies in Europe, and maybe therefore that parks that angle to one side. Anna, what are we watching?
Let's keep the focus on currencies then, Guy. The dollar suffered its deepest one-day drop since last year's tariff rollout after President Trump said he didn't think the currency had weakened excessively. Bloomberg's dollar gauge slid as the comments sapped the appeal of the greenback and US Treasuries, boosting what has become known as the debasement trade. The UK Prime Minister will be accompanied by some of the country's biggest banks and businesses on his visit to China, which starts today. Keir Starmer seems confident he can do what few leaders have shown the political dexterity to pull off. That is broadening trade ties with China without provoking the ire of President Trump. And Tether has quietly become one of the biggest players in the global gold market. The crypto firm's CEO describes the company's role in the gold market as similar to that of a central bank. The company now holds 140 tons of gold, valued at $24 billion, and has been adding 1 to 2 tons a week to its cash. Tom.
OK, we're talking about tech today. We're talking about healthcare as well, the pharmaceutical stocks in focus. So let's combine the two and talk about a tech startup in the health space in Europe that has been gaining a lot of traction. Sword Health, making acquisitions as it looks to expand its footprint in Europe. The AI health startup, valued at $4 billion, was valued at $4 billion in a 2025 funding round and is backed by Kohler Ventures, General Catalyst and Founders Fund. We are joined now by the founder and CEO of Sword Health, Virgilio Bento. Virgilio, thanks for your time. Talk to us. Let's start with the acquisition strategy. You're making fresh acquisitions. Talk us through what you're pulling the trigger on and why it makes sense.
Thank you, Tom. Thank you for having me. So what we are seeing is that there's currently a very rapid adoption of AI in healthcare. And so historically, all the new solutions were launched organically inside Sword. But what we are seeing now is that given the rapid adoption of healthcare, of AI in healthcare, we are accelerating our expansion to acquisitions. And we do that for a couple of reasons. Maybe some new solution that a specific company has. In the specific case of this acquisition, it came down to the network of partnerships, the network of global deployments, and also the book of business that Gaia had, which we thought it was very important for us to accelerate our growth.
OK, so to be clear, this is a company called Kaya Health that you're acquiring, and you're making that announcement. You're making that announcement today. What does it tell us about your broader M&A strategy and whether that's core for you, at least for 2026?
So if for 2026, we're going to be very active in terms of acquisitions. This is the first one. We are working in a multiple of couple of ones, either in the US and Europe. And so we expect to announce something, a couple of more acquisitions in the first half. And the acquisition strategy really focus on how can we expand into other areas of healthcare, how we can expand to other regions. And so that's pretty much, we've been always very conservative on acquisitions. Now we are being more, I would call it, expansionist when it comes to that playbook.
Virgilio, good morning to you. So Kaya Health, that's the business you're going after this time. Are you going to need to raise more money in order to do that?
No, not for this one. We are indeed raising more money. We are looking to do a $500 million raise in the first quarter. There's pent-up interest from the market for us to do that. That's somewhat connected to the acquisitions to get us some dry powder and some optionality. We are cash flow positive. We've been cash flow positive in 2025 while growing very, very fast. So we don't have cash needs to support the existing business. It's really about the M&A strategy and the optionality that capital raise will allow us to have. And so, yeah, we are looking to do something in the first quarter in terms of raising money.
Okay, do you know how much you're going to raise in the first quarter? You're saying it's not for this deal, is it for others?
Yes. For future deals, really focused on optionality, and we are looking to raise probably $500 million, around $500 million. Could be a little bit less, could be a little bit more, but that's the quantum that we are looking to raise in the first quarter.
Fee, good morning, it's Guy. Where in the healthcare space is AI going to have the biggest impact?
It's honestly across the spectrum. So when you look at the big applications of AI right now, there are three big applications of AI. Coding is one, search is another one, and the third one is healthcare. And that's why you see OpenAI and Anthropic that are on the epicenter of the AI revolution going after healthcare, right? And that tells you that they see to their data that healthcare is a very, very important use case in healthcare right now, a real use case, I would say, with real value. And so in terms of the applications that we are currently pursuing, we are using AI to treat and heal people if they have pain, if they are anxious, or if they have urinary incontinence. But at the same time, we are also using AI to scale healthcare operations. We announced this partnership with the Greek government where we are taking care of AI triage. So it's really across the spectrum that we are seeing a very rapid adoption of AI in healthcare.
The story this year around AI is people are looking for deliverables. They want to see the productivity improvement. What productivity improvement do you get when you apply AI to those kinds of spaces you've just outlined? How much better is the outcome once you start using AI in the healthcare space?
So in healthcare, there's this paradoxical thing, which is the highest quality of care is actually the cheapest form of care. And what this means is when you are able to provide high quality of care to someone, that patient has their problem fixed, and they don't need to go after wasteful healthcare services. An example of that is someone with physical pain, back pain. They do non-invasive care. They have their problem fixed. They don't need a very expensive surgery down the line. And what AI enables is for people to have access to that high-quality care in the comfort of their homes, in total convenience and as accessible as running water. And what that leads to then is to massive savings for payers, for national health systems, for governments on the cost of healthcare. One data point there is we saved, since our market launch in 2020, we saved our clients more than $1 billion in wasteful healthcare costs. Really additional levels of care that are not needed because AI was able to fix the problem of the patient. And the same thing with AI triage, as an example. When people are able to just call a number, talk about the problem, and get recommendations on what to do, get guidance, they don't need to go to the emergency room, which is the more challenging, costly solution to a problem in healthcare. And so we really see not only in terms of quality of care, not only in terms of access, which of course are of paramount importance and the number one thing why we apply AI in healthcare, but then you see these really big impact on healthcare costs by removing healthcare waste with high quality care. And that's actually the big tailwind behind our growth, not just in the US, but also in Europe, is the fact that AI in healthcare not only drives quality significantly higher, but also, and I'll say equally important, drive costs down. And that both things are very important in healthcare right now, and AI is able to deliver on both.
Virgilio, in terms of, you mentioned your partnership with the Greek health ministry. Are you looking to seal partnerships with other health ministries around Europe? How far are you to looking in those deals if you are? Is the NHS up for grabs here in the UK?
We are doing really good work with the NHS. We have several trusts and ICSs as clients. Really, in the NHS, the problem is really access, right? There's a big waiting list for all types of care, which traditional care models based on human clinicians, given the difference between supply and demand, cannot deliver on. And so AI really has a big impact on removing those or eliminating those waiting lists. And that's the work that we are doing in the UK NHS. More on the component of delivering care across all of our verticals of care. We are now starting to work globally, not just in Europe, but globally with other countries on the AI triage solution, because AI is a very important piece of healthcare because it's the front door. If you get triage right, you get a much healthier healthcare world. And we are seeing that AI can do that much more, I'll call it in a much more scalable and effective way than a labor-intensive model.
Virgilio Bento, founder and CEO of Sword Health. Thank you very much indeed on that acquisition and plans to raise maybe up to $500 million in the first quarter of this year. Let's get to the auto space right now and look ahead to earnings. Of course, Mag 7 numbers coming through later today. Tesla amongst the mix, of course, reporting earnings later. Bloomberg Global Autos editor Craig Trudell joins us now. Craig, is this less for Tesla? Is it less about their cars and more about the future prospects of robotics and driverless robo-taxis?
Yeah, I mean, it's a remarkable time for Tesla because I think Elon Musk really is sort of demonstrating how much he has sort of sell-side analysts in the street, like kind of wrapped around his finger, right? His earnings for his company are going in the wrong direction, where everybody thought they were going to be going. It's very dramatic, the sort of reset that we've seen, and yet the stock price has been, quite buoyant, and it's still a very valuable company, in spite of the fact that sales continue to slip, and a lot of questions about, just how much progress he's making on some of those things. The humanoid robots are coming maybe late next year, ready for selling to consumers. And then the quote-unquote robo-taxis, only just recently has he demonstrated an ability for some of those to be going around Austin, Texas, but maybe with trail cars kind of helping them out. So a lot of questions about, what exactly
that sounds expensive
he's doing.
as well.
Yes.
Doesn't sound sustainable.
I really want to know what these robots are going to do for us, but we might have to expand on that
Do
conversation.
You want a humanoid robot?
Basically, that's basically what it is.
Yes.
Yes. In my house, this would be helpful. Let me broaden the conversation, though, Craig, because I want to talk to you about what's going on with SpaceX. The FT is reporting a possible date for the SpaceX IPO. Now, we always talk to you about cars, but these are also vehicles that go somewhere. So what are your thoughts on the date that we're hearing about here for this? What do we know?
I mean, this is a fascinating report from the FT. The idea that a couple of things are sort of pointed to as reasons for why they're targeting June. One being a couple of planets align then, and Musk is quite fond of puns. He when he acquired Twitter, he famously walked in with the sink and said, "Let that sink in." This one is, if this report is true, the obvious one is, the planets have aligned for SpaceX to go public. I guess the drum tick there after that. And then,
we'll fill in the sound effects.
I guess the other factor that FT points to is it's his birthday. And so, who wouldn't want to celebrate their birthday with, taking their company public at an incredibly high valuation and maybe breaking a record for the amount of money raised in an IPO.
That's the world we're in now. It's puns and birthdays, and they tell us
and
things.
Immense wealth.
Yeah, he could be celebrating as a trillionaire, couldn't he, on this,
Indeed,
if things continue as they've been going. Craig, thank you very much indeed. Looking ahead to Tesla and with the details around that potential SpaceX IPO, of course, our Global Autos editor, Craig Trudell. Coming up, by how much has the UK Technology Secretary said AI can potentially boost economic output by in a single year? The answer when we come back. This is Bloomberg.
pay them.
Welcome back. Now, we're laser focused on AI once again today with ASML and SK Hynix. So, before the break, we asked how much has the UK Technology Secretary, said that AI can potentially boost economic output here in the UK in a single year. 140 billion pounds. That is the assessment from UK Tech Secretary Liz Kendall, promising, of course, to offer training in AI for all UK workers. In a statement, her department says online courses developed by British industry will be made available to all UK adults. Anyway, aspirational potentially, but they certainly need the growth, and maybe it comes through from AI productivity.
Why are drug stocks down today? Why are pharma stocks under pressure? Let's find out. Sam Fazeli has hot-footed it to set from the Bloomberg intelligence side of the building. Why are drug stocks down today?
So I'll give you a few possibilities, right? Okay. One is that we had the Inflation Reduction Act list of new drugs for 2028, which will be negotiated by the government in the US. Yep. Impacts Medicare. And that shouldn't have been a surprise, but it maybe has reminded people that this drug price pressure is still relevant, even if MFN stories have gone by the by. And on top of that, I think you've got this great story out of ASML. Maybe we've got tech back. And pharma has performed so well. Yeah. Maybe you take some profit there.
Was that tech back or take back?
Take back what you need, your cash, and put it into tech.
Yes.
Tech back, technology stocks.
Yeah. Excellent. And the other thought we were having this morning was around FX, fast-moving narrative. Yes. Is there a rule of thumb you can give us for European pharma, what these FX moves mean? Because they're not all the same. They don't all have the same geographical footprint. They don't all report in the same currency. Is there a rule of thumb around FX?
Yeah, well, obviously the ones who report in US dollars, such as Novartis, for instance, they have that direct FX impact. But also, if you think about it, this push for MFN, which supposedly has increased them moving manufacturing to the US, should cushion some of it at some point. But of course, by the time you put your spade in the ground and get the manufacturing going, it's 5 years. So if all your costs have also moved into the US dollar and you're selling in the US, it doesn't matter so much for your impact. But that's going to take some time. Okay. But generally, FX, weaker dollar is not good for pharma.
Okay, we will watch that, and we'll watch their capex plans as a result. Sam, thank you very much. Sam Fazeli from Bloomberg Intelligence with the latest on that sector. Coming up on today's daybook, so these are the things that we're watching for you today. 10-year auction out of Germany. Prime Minister Starmer in Beijing. That is fairly imminent. He's going to be there really soon. A Canadian rate decision, of course, the Fed rate decision, and plenty of tech earnings. We, Guy, are going to speak to Skylar Montgomery-Koenig.
Are we?
Do that? Yes.
She's here. Well, yes. We probably should. It would be rude not to. You excited about the Fed?
I was more excited before we got the dollar move yesterday, and that's the more exciting theme. I think certainly something to watch because we do have 4 new voting members as the usual turnover happens in January. We're looking at dissents. We're looking at communication. I think the baseline expectation is that you'll get 2 dissents, so any fewer than that. And it's a hawkish reaction. On communication, the data has been stronger out of the U.S. And what you've seen as well as Powell's press conferences tend to be a little bit more hawkish. So that could be a boost to yields. And it could be for the dollar. But I think there's much more going on elsewhere that's kind of pulling in the other direction.
She's almost convincing me that I need to stay up tonight and watch it.
I still think the press conference is going to be pretty gripping.
I do too, yes, I do too.
This is one of the few people who's actually stood up to President Trump. So we'll see what he has to say, Jay Powell, when he's quizzed on this. Also, if he says anything to support the dollar, and a nod around that, high yields. Skylar, what are you making of the broader market movements that we're seeing today? And Guy's been pointing out that on a headline basis across the benchmark, we're not seeing much, but there's some really interesting stories at play. Do we start to see more conviction around the AI theme and how that breaks out with the earnings out of the US later today?
I think it's a hard one because what we saw last earnings season, and actually what we've seen repeatedly is that out of the AI stocks and tech more broadly, is that you get earnings that come in very strongly, but you need a really big surprise. And this is generally true across earnings where you need a big surprise for a big market rally, but you need a little downside surprise for a big sell-off. And so that skew means that if you just get okay earnings, if you get a return on investment relative to that capex that's strong, you just kind of toddle along because that's the baseline expectation now. So it means you maintain those valuations. But I think what's more important in markets currently is what's happening from the macro because you're having such big moves in yields in the dollar. And and those are feeding into your equity markets more so than earnings season, I would say, actually.
And speaking of those FX moves, the euro dollar down by 0.5%, and we've been talking so much about earnings today. Maybe we need to spend a little moment on this story because it has had an impact. Martin Kocher of the ECB, Austrian, important, as Tom pointed out to me earlier, talking to other media and saying that there's no need to change interest rates right now. He's comfortable with them right now, but there could be a reason to cut interest rates if the euro keeps moving in the way it does and it weighs on inflation. I mean, what do you make of that? I mean, it's quite a sizable move for something that was quite heavily caveated.
Yes, I mean, the euro problem has been a problem all of last year, right? We already knew this. When you have a very expensive euro, which it is or was relative to rate differentials, and certainly the move that we got yesterday was out of line with fundamentals, as in there's a gap that's opened up between rate differentials now that points to some kind of premium. So that weighs on export competitiveness, which is an issue already for Europe because Germany in particular is competing with China. China is no longer sending as much to the US, so they're competing in the same markets because of tariffs. And you also have the inflation bit come into the picture where you have downside risk to inflation. Now, I think, yes, you could have another cut priced in for Europe. That could certainly happen. But I'm not sure that's the determinant of what euro dollar is going to do because of what's actually been driving in the past day, as well as the fact that it's one cut.
Right. The euro is up on a 2-day basis, like a lot. So we had the Trump move, and then we've unwound a little bit of it. And now we're still with 119, nearly 120.
Are we clear on what the pain point is on the earnings front? Is it 122? Is it above that? We've been discussing the numbers in terms of the earnings squeeze for those European companies that have that export function.
Yeah.
Whether we get to a point that really has a material impact.
But if you're a US investor, it's fantastic. Put money to work in Europe. It makes it even more attractive.
Shall we have a moment to flag the tech earnings coming
Let's have a moment.
later today? Meta. This is that moment.
Yes, this is that moment. Thanks for the cue. Yes, thank you. Skylar, thank you very much indeed for walking us through the broader markets. We also have earnings coming up. ASML's done a lot of the heavy lift, of course, in the European session. Then we look ahead to Meta, we look ahead to Tesla, we look ahead to Microsoft, the Azure.
How high is the bar?
It's still it's pretty high, right? You have to continue to convince around the capex, which is paying off for ASML because they're spending, but it's paying off for TSMC.
It was hardware versus handbags in the European session. Now we weave in something beginning with H for the US session and all those tech earnings. We will work on that by tomorrow.
That's it for the opening trade. The Pulse is up next. This is Bloomberg.